Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In this video I'd like to share a trade on a currency that was sent in by one of our users. This is a 3-minute chart of the 6C. This is the future of the Canadian dollar against the US dollar. So a Canadian dollar against the US dollar future on the CME. So it's a currency chart basically. As you can see, the software generated a lovely automatic TS4 sell setup at this point here, and as you can see it nailed the decline in the Canadian dollar absolutely beautifully. So let's have a closer look at this. If we go back in time a little bit, we can see that this TS4 sell unfolded on lovely stochastic divergence, so it's quite nice when we get MTPredictor automatic trade setups that line up with standard technical analysis tools that most traders are familiar with. So lovely stochastic divergence, automatic TS4 sell. Let's put the analysis on. To do this is really easy. Right mouse click, select automatic analysis, click on the coloured reversal bar here, which is a red for sell, and at the first target, you can see the market got down there nicely. At the first target it was a lovely 3.3R profit. Again, remember that in MTPredictor we use position sizing, so for every trade we risk a fixed percentage of our trading account. In this example I'm using 2% of a sample $20,000 account, so that would be risks of less than $400 per trade. That means on this particular setup we could have sold or gone short 6 contracts. So this is how we keep our initial risk small at 1 risk unit and our profits large at, well, greater than 1 risk unit, or normally greater than 2 risk units and above. In other words, our profits are large in relation to our losses, and that's what's important for professional traders. At this point here, let's have a look at the STF. Here the STF is strong. What we mean by that is that it's greater than our strength band here. That normally indicates that the market is going to trade a little bit further. So rather than coming out at our profit target, we use our ATR stop, which in this case are red dots here, to look to trail the short trade a little bit further. So if we go forward, 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 see the market's dropping, our ATR stop is following it down. We keep on going forward, 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 forward until here. This is where our ATR stop would have taken us out of this short trade. As you can see, it ran the trade a little bit further than our initial target. So now if we do the risk reward on this, we can manually place this on at this level here to see what our final profit would have been, and it would have been a very healthy 6R profit. So as I said at the start, our profits are in what we call risk units. In other words, they are factored as a relation of the initial risk. So a 6R profit would mean that this $2,100 profit here was approximately 6 times greater than our initial risk of $360. And this is the important thing about using position sizing, in that it keeps our losses that do come through. You can see here there's a history triangle on here that indicated there was a potential minus 1R loss here, but this minus 1R loss was small in relation to this 6R profit, which is what keeps the profits large and losses small over time. That's a fundamental requirement for any professional successful trader. But anyway, this was a trade that was sent in by one of our customers, and I thought it was a good one to share with you because it's a great example of a fully automatic MTPredictor trade setup on a currency. In this example, the 6C, which was the Canadian dollar against the US dollar on a 3-minute chart. And as you can see, produced a great result with a trade that caught the decline beautifully and came out with a lovely plus 6R profit. So a great example of the standard automatic trade setups unfolding on currencies.